Question 1. A registered options principal, ROP, is primarily responsible for which of the following activities? A. Approving all new options accounts and options communications. B. Executing options trades for institutional clients. C. Supervising the firm's equity trading desk. D. Creating and maintaining the firm's options proprietary trading strategy. Answer: A. Approving all new options accounts and options communications. The registered options principal, ROP, holds specific supervisory responsibilities for a firm's options business, which notably includes reviewing and approving new options accounts to ensure suitability for the client and approving all communications related to options. This ensures that the firm adheres to FINRA and option-specific rules regarding customer knowledge and appropriate risk disclosure. For example, before a customer can trade options, an ROP must sign off on the account application, confirming it's suitable for the customer's investment profile. Always remember that principals, like the ROP, are gatekeepers for compliance and risk management in their specific areas of expertise. Question 2. Under FINRA rules, which of the following is required for a registered representative to share in the profits and losses of a customer's account? A. Written permission from the customer only. B. Written permission from the broker-dealer only. C. Written permission from the customer and written permission from the broker-dealer. D. Verbal permission from both the customer and the broker-dealer. Answer: C. Written permission from the customer and written permission from the broker-dealer. For a registered representative to share in the profits and losses of a customer's account, FINRA Rule 2150 requires both the customer's written consent and the member firm's written authorization. Additionally, the sharing must be proportionate to the registered representative's financial contribution to the account, unless the representative is a direct family member of the customer. For instance, if a representative wants to invest alongside a client and share in potential gains or losses, they must obtain formal approvals from both parties and ensure their financial stake aligns with their share of the profits/losses. This rule protects customers and prevents conflicts of interest or undue influence. Question 3. According to MSRB rules, which of the following statements is true regarding a municipal securities principal's responsibilities for reviewing municipal securities advertisements? A. They must review and approve all municipal advertisements prior to first use. B. They must review all municipal advertisements within 10 business days of first use. C. They are exempt from reviewing municipal advertisements if the advertisement is purely factual. D. They may delegate the approval process to a non-registered assistant if the assistant has relevant experience. Answer: A. They must review and approve all municipal advertisements prior to first use. MSRB Rule G-21 requires that all municipal securities advertisements be approved in writing by a municipal securities principal or general securities principal prior to their first use. This pre-approval ensures that all promotional materials are fair, balanced, and not misleading, protecting the investing public. For example, any brochure or website content promoting municipal bonds must be reviewed and signed off on by a qualified principal before it is distributed to potential investors. This strict pre-use approval process is a cornerstone of investor protection in the municipal securities market. Question 4. A customer initiates a complaint alleging a financial loss due to a registered representative's actions. Under FINRA rules, how long must the broker-dealer retain records of this complaint? A. 3 years. B. 5 years. C. 6 years. D. Indefinitely. Answer: C. 6 years. FINRA Rule 4513 mandates that broker-dealers retain records of all customer complaints for a period of not less than 6 years. This extended retention period is crucial for regulatory oversight and allows for thorough investigation of allegations, even long after the initial complaint. For instance, if a customer complains about an unsuitable investment recommendation made 6 months ago, the firm must keep all documentation related to that complaint for the next 6 years, ensuring accountability and compliance. This long retention period underscores the seriousness with which FINRA views customer complaints. Question 5. Which of the following is a key supervisory responsibility of a Series 10 principle concerning branch office inspections? A. To perform unannounced inspections of all branch offices annually. B. To delegate all inspection duties to the branch manager without direct oversight. C. To ensure that all branch offices are inspected according to a risk-based system, at least annually. D. To only inspect branch offices that have a history of compliance violations. Answer: C. To ensure that all branch offices are inspected according to a risk-based system, at least annually. FINRA Rule 3110 requires member firms to conduct internal inspections of their branch offices and OSJs, offices of supervisory jurisdiction, at least annually, following a risk-based system. This means that while some offices may receive more frequent or in-depth reviews based on their activities or past issues, every office must be inspected at least once a year. For example, a principal might oversee a firm's inspection program, ensuring that high-risk offices, e.g., those with a high volume of new accounts or complex products, receive more frequent attention, but that every branch receives its mandatory annual review. The goal is to proactively identify and address potential compliance deficiencies across the firm. Question 6. When a customer opens a new account at a broker-dealer, which document is primarily used to gather information about the customer's financial status, investment objectives, and risk tolerance? A. New account form. B. Trade confirmation. C. Prospectus. D. Account statement. Answer: A. New account form. The new account form is the primary document used by broker-dealers to collect essential suitability information from a customer before opening an account. This form gathers details such as the customer's financial background, investment experience, risk tolerance, and investment objectives. For example, it would ask if the customer is seeking growth, income, or capital preservation, and what their financial resources are, which helps the firm ensure that recommended investments are appropriate. This information is crucial for fulfilling the firm's suitability obligations under FINRA Rule 2111. Question 7. A Series 10 principal is supervising a registered representative who wishes to engage in a private securities transaction, selling away. Which of the following is required for the representative to proceed? A. Verbal notice to the broker-dealer and compensation disclosure to the customer. B. Written notice to the broker-dealer and firm approval for compensation. C. No notice required if the representative is not compensated. D. Written notice to FINRA and written approval from FINRA. Answer: B. Written notice to the broker-dealer and firm approval for compensation. Under FINRA Rule 3280, a registered representative who wishes to engage in a private securities transaction must first provide written notice to their broker-dealer. If the representative is to receive compensation for the transaction, the firm must approve the transaction in writing, and the transaction must be recorded on the firm's books and records. For instance, if a representative wants to sell interests in a limited partnership outside of their firm, they must notify their broker-dealer in writing, and if they'll be paid for it, the firm must formally approve and supervise the transaction. This rule is designed to prevent unregistered sales and protect investors. Question 8. What is the primary purpose of the USA Patriot Act in relation to broker-dealers? A. To regulate the issuance of new securities. B. To combat money laundering and terrorist financing. C. To establish guidelines for investment banking activities. D. To protect investors from market manipulation. Answer: B. To combat money laundering and terrorist financing. The USA Patriot Act, enacted in 2001, significantly expanded the regulatory framework for financial institutions, including broker-dealers, with the primary goal of deterring and punishing terrorist acts and combating money laundering. It requires firms to implement robust anti-money laundering (AML) programs, including customer identification programs (CIPs), suspicious activity reporting (SARs), and employee training. For example, when opening a new account, a firm's CIP processes information like a customer's name, date of birth, and address to verify their identity and prevent the use of the account for illicit activities. This act places a major responsibility on broker-dealers to be vigilant against financial crimes. Question 9. Regarding discretionary accounts, which of the following statements is accurate concerning the oversight responsibility of a Series 10 principal? A. Discretionary orders must be approved by the principal prior to execution. B. Discretionary orders must be reviewed by the principal promptly after execution. C. Only options orders require principal approval for discretionary accounts. D. Discretionary accounts are exempt from principal review requirements if the customer is experienced. Answer: B. Discretionary orders must be reviewed by the principal promptly after execution. While a principal must approve the opening of a discretionary account, individual discretionary orders generally do not require pre-approval. Instead, FINRA rules mandate that all transactions in discretionary accounts must be reviewed promptly after execution by a qualified principal to ensure suitability, detect excessive trading, churning, and monitor for any unauthorized activity. For instance, a principal will regularly check the activity in discretionary accounts to confirm that the frequency and size of trades align with the client's stated investment objectives and risk tolerance. This post-execution review is a crucial safeguard for client protection in discretionary accounts. Question 10. A broker-dealer must establish and maintain a business continuity plan, BCP. Which of the following is a key element of a BCP? A. A plan for expanding the firm's market share during a recession. B. Procedures for handling customer complaints related to sales practices. C. Strategies for minimizing tax liabilities for the firm and its clients. D. Alternate communications methods and backup facilities to ensure continued operations during disruptions. Answer: D. Alternate communications methods and backup facilities to ensure continued operations during disruptions. A business continuity plan, BCP, is a critical requirement for broker-dealers, designed to ensure that the firm can continue its operations and fulfill its obligations to customers even in the event of significant business disruptions. A key element of a robust BCP includes identifying and establishing alternate communications methods, such as backup phone systems and email, and securing backup facilities like off-site data centers. For example, if a natural disaster makes the firm's main office inaccessible, the BCP would detail how employees can work from an alternative location and access client information securely. This planning protects customers and market integrity by maintaining service continuity. Question 11. What is the primary purpose of FINRA's Rule 3110 regarding supervision? A. To establish capital requirements for broker-dealers. B. To ensure that member firms supervise the activities of their associated persons and the conduct of their business. C. To regulate the underwriting of new securities issues. D. To define the types of securities that can be traded on an exchange. Answer: B. To ensure that member firms supervise the activities of their associated persons and the conduct of their business. FINRA Rule 3110, titled Supervision, is a foundational rule that requires every FINRA member firm to establish and maintain a system to supervise the activities of its associated persons, including registered representatives, and the conduct of its business. This rule aims to ensure compliance with securities laws, FINRA rules, and to prevent fraudulent and manipulative acts. For example, a Series 10 principal implements a supervisory system that includes regular reviews of representative emails, trade blotters, and customer account activity to ensure compliance. This comprehensive supervisory requirement is vital for protecting investors and maintaining market integrity. Question 12. Under FINRA rules, a registered representative's outside business activities, OBAs, must be disclosed to the member firm. What is the firm's responsibility once notified? A. To prohibit all outside business activities regardless of their nature. B. To determine whether the OBA creates a conflict of interest or is otherwise permissible. C. To report the OBA to FINRA immediately upon notification. D. To ensure the OBA is included in the representative's performance reviews. Answer: B. To determine whether the OBA creates a conflict of interest or is otherwise permissible. FINRA Rule 3270 requires registered representatives to provide written notice to their member firm regarding any outside business activities they engage in. Upon receiving this notice, the firm must then determine whether the OBA creates any conflicts of interest, appears to be a private securities transaction, selling away, or otherwise compromises the representative's ability to fulfill their duties to the firm and clients. For instance, if a representative is also a real estate agent, the firm must assess if this outside activity creates any suitability issues or improper influence on clients. The firm has a supervisory obligation to review and approve or disapprove OBAs. Question 13. Which of the following best describes the role of a municipal securities principal in relation to MSRB Rule G37? A. To approve all new municipal securities offerings. B. To ensure the firm complies with rules concerning political contributions, pay-to-play. C. To manage the firm's municipal bond trading desk. D. To resolve customer complaints specifically related to municipal bonds. Answer: B. To ensure the firm complies with rules concerning political contributions, pay-to-play. MSRB Rule G37 specifically addresses political contributions and prohibitions on municipal securities business, and is commonly known as the pay-to-play rule. A municipal securities principal is responsible for ensuring the firm and its associated persons comply with this rule, which aims to prevent firms from obtaining municipal bond business by making political contributions to issuer officials. For example, a principal must monitor the political contributions made by municipal finance professionals to ensure they do not exceed the de minimis amount and avoid triggering a 2-year ban on business with that municipality. Compliance with G37 is critical for maintaining fairness in the municipal market. Question 14. How often must a broker-dealer's anti-money laundering (AML) compliance program be tested? A. Annually by an independent party. B. Every 2 years by an independent party or qualified firm personnel. C. Every 3 years by the firm's CCO. D. Upon request from FINRA only. Answer: A. Annually by an independent party. The Bank Secrecy Act, BSA, and FINRA Rule 3310 require broker-dealers to have their anti-money laundering (AML) compliance program independently tested annually. This test can be conducted by an independent third party or by qualified firm personnel who are not involved in the operation of the AML program, ensuring an objective review. For example, a firm might hire an outside consulting group to audit its AML policies, procedures, and training effectiveness each year to identify any weaknesses and confirm adherence to regulations. This annual independent review helps ensure the AML program remains robust and effective in detecting and reporting suspicious activities. Question 15. A customer opens a margin account. What is the principal's primary supervisory concern regarding transactions in this account? A. Ensuring all trades are executed on a principal basis. B. Monitoring for excessive trading, churning, and ensuring suitability of margin use. C. Confirming the customer has at least 10 years of trading experience. D. Delegating all review responsibilities to the registered representative. Answer: B. Monitoring for excessive trading, churning, and ensuring suitability of margin use. When supervising margin accounts, a principal's primary concern is to monitor for excessive trading, also known as churning, and to ensure the suitability of using margin for the customer's financial situation and investment objectives. Margin accounts introduce leverage, which amplifies both potential gains and losses, making suitability a critical factor. For instance, a principal reviews account activity to ensure that the number and size of trades are appropriate for the customer's risk tolerance and that the use of borrowed funds is not unduly exposing them to financial risk. This close supervision helps prevent inappropriate use of margin and protects customers. Question 16. A Series 10 principle discovers that a registered representative has been accepting undisclosed gifts from a mutual fund company in exchange for pushing their products. This action is a violation of which ethical standard? A. Best execution. B. Fair pricing. C. Conflicts of interest. D. Timely confirmations. Answer: C. Conflicts of interest. Accepting undisclosed gifts or compensation from a product sponsor in exchange for promoting their products creates a significant conflict of interest. This situation compromises the registered representative's duty to act in the best interest of their clients, as their recommendations might be influenced by personal gain rather than the client's suitability. For example, if a mutual fund company provides expensive trips or cash to a representative who then disproportionately recommends that company's funds, it raises a clear conflict of interest. Principals must identify and address such situations to maintain fair and ethical business practices. Question 17. Which of the following accurately describes the Know Your Customer (KYC) rule? A. It requires broker-dealers to obtain criminal background checks on all new customers. B. It mandates that firms understand the essential facts about every customer and the authority of each person acting on behalf of the customer. C. It stipulates that firms must verify the creditworthiness of all customers before opening an account. D. It obliges firms to provide customers with a detailed explanation of all products before any transaction. Answer: B. It mandates that firms understand the essential facts about every customer and the authority of each person acting on behalf of the customer. The Know Your Customer (KYC) rule, a core component of FINRA Rule 2090, requires broker-dealers to use reasonable diligence to know and retain the essential facts concerning every customer and concerning the authority of each person acting on behalf of such customer. This rule is fundamental for determining suitability and for fulfilling AML obligations. For example, firms must collect information about a customer's investment objectives, financial situation, and risk tolerance to ensure that recommended investments are appropriate for them. Understanding these essential facts is crucial for protecting customers and preventing fraudulent activities. Question 18. Under FINRA rules, what is the principal's responsibility regarding customer complaints? A. Only written complaints must be reported to FINRA. B. All complaints, whether written or oral, must be reported to FINRA. C. All complaints, whether written or oral, must be recorded and retained by the firm, but only certain types of complaints require reporting to FINRA. D. Complaints can be handled informally without documentation if resolved quickly. Answer: C. All complaints, whether written or oral, must be recorded and retained by the firm, but only certain types of complaints require reporting to FINRA. FINRA Rule 4513 requires member firms to maintain a file of all written customer complaints for a period of 6 years, and firms should also document oral complaints. While all complaints must be recorded and retained, only those alleging theft, misappropriation of funds or securities, or forgery must be reported to FINRA promptly. For instance, if a customer calls with a minor complaint about a late statement, the firm must document it, but it typically doesn't need to be reported to FINRA unless it falls into the specified serious categories. This system ensures proper internal record keeping while allowing FINRA to focus on serious violations. Question 19. A Series 10 principle is reviewing communications with the public. Which of the following best describes the term retail communication under FINRA rules? A. Any written or electronic communication distributed to 25 or more retail investors within any 30 calendar day period. B. Any written or electronic communication distributed to fewer than 25 retail investors within any 30 calendar day period. C. Any communication used with institutional investors only. D. Any communication prepared for broadcast or print media. Answer: A. Any written or electronic communication distributed to 25 or more retail investors within any 30 calendar day period. Under FINRA Rule 2210, retail communication is defined as any written, including electronic, communication that is distributed or made available to 25 or more retail investors within any 30 calendar day period. This category typically requires pre-approval by a qualified principal and may need to be filed with FINRA. For example, a promotional email newsletter sent to a firm's general mailing list of 50 clients would be considered retail communication and must be approved by a principal before sending. Understanding this definition is critical for proper supervisory oversight of marketing materials. Question 20. What is the primary role of a Series 10 principal in monitoring a firm's order entry and execution systems? A. To personally execute all customer orders. B. To ensure compliance with best execution obligations and proper handling of customer orders. C. To develop proprietary trading algorithms for the firm. D. To only review orders placed by institutional clients. Answer: B. To ensure compliance with best execution obligations and proper handling of customer orders. A key supervisory responsibility of a Series 10 principal is to monitor the firm's order entry and execution systems to ensure compliance with best execution obligations and the proper handling of all customer orders. This involves making reasonable efforts to achieve the most favorable terms available for a customer's order. For example, a principal might review trade blotters and exception reports to identify any instances where orders were not routed to the market offering the best available price or where errors occurred in order entry. This oversight ensures that clients receive fair and advantageous trade executions. Question 21. Which of the following is the most significant supervisory concern for a Series 10 principal regarding a registered representative's personal securities accounts held at other firms? A. Ensuring the representative maintains a minimum balance in the account. B. Confirming the representative is only trading in blue-chip stocks. C. Monitoring for potential front-running or other manipulative practices. D. Verifying that the representative's account is profitable. Answer: C. Monitoring for potential front-running or other manipulative practices. A significant supervisory concern for a Series 10 principal regarding a registered representative's personal securities accounts held at other firms is monitoring for potential front-running or other manipulative practices. FINRA Rule 3210 requires representatives to notify their employer firm if they open an account at another broker-dealer and to arrange for duplicate statements to be sent to their employer. This allows the principal to review the representative's trading activity for signs of abuse, such as trading ahead of customer orders, front-running, or engaging in other unethical or illegal activities. This oversight helps maintain market integrity and prevents conflicts of interest. Question 22. When conducting a suitability analysis for a municipal bond recommendation, which of the following is considered the most critical factor? A. The customer's prior experience with options trading. B. The customer's state of residency and tax bracket. C. The customer's preference for growth stocks. D. The customer's willingness to accept high-risk investments. Answer: B. The customer's state of residency and tax bracket. For municipal bond recommendations, the customer's state of residency and tax bracket are arguably the most critical factors for suitability. Municipal bonds often offer tax-exempt interest income, which can be free from federal, state, and local taxes, depending on the bond and the investor's location. For example, a resident of New York in a high tax bracket would find a New York-issued municipal bond particularly attractive due to the potential for triple tax exemption. Failing to consider these factors could lead to an unsuitable recommendation, as the tax benefits are a primary reason investors choose municipal bonds. Question 23. A Series 10 principal must ensure that firm policies and procedures are adequate to prevent insider trading. Which of the following is an essential component of an insider trading prevention program? A. Limiting all employee trading to once a month. B. Establishing information barriers, Chinese walls, between departments. C. Requiring all employees to only trade in index funds. D. Prohibiting employees from owning any securities. Answer: B. Establishing information barriers, Chinese walls, between departments. An essential component of an effective insider trading prevention program is establishing information barriers, often called Chinese walls, between departments that may possess material non-public information, MNPI, such as investment banking, and those involved in trading or research. These barriers prevent the flow of MNPI to individuals who could use it to gain an unfair trading advantage. For example, strict separation between an M&A advisory team and a trading desk ensures that confidential deal information doesn't leak and influence trading decisions. This separation is crucial for maintaining fair and equitable markets. Question 24. How often must a broker-dealer conduct an annual review of its supervisory system and written supervisory procedures, WSPs? A. Every 2 years. B. Annually. C. Every 5 years. D. Only when there is a significant change in regulations. Answer: B. Annually. FINRA Rule 3110 requires member firms to conduct an annual review of their supervisory system and their written supervisory procedures, WSPs. This review is designed to ensure that the procedures remain effective and are updated to reflect any changes in rules, regulations, or the firm's business activities. For instance, a Series 10 principal is directly responsible for overseeing this yearly assessment to identify any weaknesses in the firm's compliance infrastructure and to make necessary adjustments. This regular self-assessment is a fundamental part of maintaining a robust and compliant supervisory structure. Question 25. A registered representative plans to give a seminar to prospective investors about general investment concepts. This communication would be classified as which of the following under FINRA rules? A. Correspondence. B. Institutional communication. C. Retail communication. D. Public appearance. Answer: D. Public appearance. Under FINRA Rule 2210, public appearance is defined as participation in a seminar, webinar, radio/TV interview, or other public speaking activity where the registered representative makes a recommendation or otherwise addresses a public audience. While the content might be subject to review, the format itself is typically classified as a public appearance. For example, a representative leading a workshop on retirement planning at a community center would be engaging in a public appearance, which requires supervisory oversight to ensure the content is balanced and fair. This classification helps ensure that information presented in such forums is accurate and not misleading.